What else we got? Anthony Vass, Richard, Scott Ford, Joe, Richard, Alabama Redneck, Jeff M, Lightfoot, Joe Clark, Jesus Roman, Dragon, Bill, J. Dell, Nicholas, what's going on, what's going on? Michael Cotta, Twisted Curly, okay. B.J. Benar, hey James. Phil Otto, what's going on there, Mr. Phil? Mike, G.L. Moley, Hercules, Crazy Man, Kelfrone, what's happening, Kelfrone? Chris Dilla, James, good evening, Mrs. Jones, Stosia, Claudia, Crazy Man, Yanya, Crave, Hasif, Grace, MK, Crazy Man, good evening to you, and how do you do? Neeler, James, what's happening? Uh-oh, Clipex Studios from Kenya, holy cow, how are you doing today? Kevin Rude, what's going on? Hercules, good evening, Ben 2K. Crazy Man, how's Target and UFP looking at UPS? Well, let's take a look at it, Crazy Man. All right. There we go. Let's get out of there. Let's go back to there. And let's take a look at what did you want to look at? Target. Target. TGT. Gotta love Target. Dividend King extraordinaire. What are we gonna need? We need glasses so that we can see. Scott Murphy, Vaz, Immortal Alien. Cool name. Rayanne, John, what's going on? Oh, two Johns. Jason, Steven. Zill. Okay. Hold tight. Jacob, sit tight. We'll take a look at Curloff. Jason, J Word. Skippy. Alrighty. Everyone, my name is James. Dividend stock brought by the 10-minute trader, where I invest in dividend stocks for weekly cash flow. Yeah, it goes well. Anyway, let me get my pen. Now, what I'm doing here is showing you what I'm doing. Okay, it's simple. It's predictable. It's considered. Consistent. It was created for my 9-year-old daughter back in 2008. Tony. Sir G, what's going on? ETM, what's going on? J-New, life is a highway. What's going on? Felix. Oh, Patreon, John, how's it going, Mr. Jonathan? Not quite sure what you have to say, Mr. Jonathan, but all right. Joe, what's happening, Joe? Rough. So that being said, the trading strategy I'm about to show you this evening was my 9-year-old daughter back in 2008 when she said one day, Daddy, what are you doing? Can you teach me? Imagine that. 9-year-olds to learn how to trade stocks. Most adults don't get it. Most adults don't understand it. Most adults ain't very good at it. So how am I supposed to teach a 9-year-old how to teach stocks? Robert, this isn't live. Jimbo, I'm out. Sorry there, Robert. Okay. You don't think it's live? I can't help you. Sorry. Alrighty. Anyway, thank you for that. Thank you for stopping by. Where was I? So 2008. Got you there, didn't I? In 2008, 9 years old, she said, Daddy, can you teach me? I'm quitting my day trading and switching your program. All right, Matico, way to go. Key Michelle. Is that right? I don't know. Hi. Anyway, so 9 years old, she wants to learn how to Day's a little bit too long today. My 9-year-old wants to learn how to invest in the stock market. That was back in 2008. So it's not as if it was a new thing. So since 2008, this is what I've been doing. Okay, now granted, I didn't start sharing all my trades in 2011. So most of you probably haven't seen my posts since 2011 all the way up to current. So that's a lot. You're probably just here on TikTok, YouTube, wherever you're from. Because I got nine different platforms. We got two more cameras, so picking up two more, so that will be 11. Not this week, next week, because I still got to get the tweaks out. My Instagram does need some walks. I can't do live on Instagram until I have 1,000 followers on Instagram. Isn't that horrible? Anyway. So 2008, my 9-year-old wants to learn how to trade. So in order to teach a 9-year-old how to trade, okay, it has to be simple, safe, predictable, consistent, in no way for her to lose. Okay, now this stuff worked out last night. Something tonight. I can already feel my throat getting a little sore. I'm just not used to talking so much. I know. You probably think I do this all day long. Nope. Alrighty. So that being said, simple, safe, predictable, consistent. No way for her to lose. Now I'm going to go over one of those criteria as we progress through the night. So you're going to learn everything from beginning to the end. I'm actually going to show you some trades when I actually do couple. I'm going to actually look at some of the stocks you guys suggest. And see how they fit into this particular strategy. And it's only one strategy I'm giving you for free. So here's the thing. If you do it right, simple, safe, predictable, consistent, 1%. No, I know it doesn't sound like much. But think about it. Over a year, 1% a week is over 50% per year. Daniel, another boomer telling us how easy it is to make money when he started on easy mode. Daniel, I beg to differ, brother. I've lost more money in than you probably made in a year. Okay. I've also made more money in 1 week than probably made in a year. Not the point. The point is I paid my dues. I've been doing this for over 30 years. 30. And I'm giving you this information for free. So if you don't appreciate it, don't need to be here. Okay? And no, I do not have it on easy mode. Because you started on easy mode. No, brother, I did not. When I started, it was $250 per trade as a commission. You have everything at your fingertips. You pay zero in commissions or just a fee, like 60 cents. I was paying $250 when I started. Don't give me your crap, brother. No. I didn't have what you have today. Don't say I had it easy. I didn't. Anyway. I don't care. No, Jedi, way to go. All right. Anyway, I'm not going to listen to him anymore. Okay, you want to be that way. Be that way. And mommy and daddy bankrolled you. No, brother. My mother left. My father left my mother back in 1960. We grew up on wealth. We were so dirt as no such thing as anything other than hand-me-downs. Okay, I don't even want to listen to you. You have nothing about who I am, what I've been through. Okay. I've pinched pennies. I have the seats of my car in order to get milk, diapers for my son back when he was a baby. I don't need it. I worked a day of labor. I was on top of a roof in the summertime in Florida doing flat tar roofs. I don't need to hear your crap. Mommy and daddy did shit. Okay. I don't need your shit. No, I don't. Evan Lee, do you have a girlfriend? Yes, I do. Bro, listen. Yeah. I got it, Aiden. All right, let's keep on going. Vince, I'm not preaching. I'm actually getting this. I hate it when people automatically assume who I am. You have no idea what I've been through. I'm doing this out of the kindness of my heart because I got sick and tired of being over. And I know there are other people out there just like me that gotten screwed over by the bank, by the lender, by the powers that be. Let me put it that way. The little guy. I've been a little guy all my life. Okay. I've been doing this for 30 years. Finally, I got to a point. It took me 30 years to get to where I am. So I don't need your crap. Really don't. Wish I had a moderator eliminate you. Anyway, besides, let's look at what we're doing and ignore people like this. So we're looking at Target is a dividend if you didn't know that, which means 5 decades of consistent profits. Okay, 5 decades, that's 50 years of profit. Whether you agree with politics or not is irrelevant. The company's been around for almost 100 years, and they have been profitable and consistently increasing their profit for over 5 decades. That's a lot. So let's see where they are today and see if it is a good possibility if of course, like Target. Okay. Crazy man. So sit tight. Now, first time I see a chart, I'm looking for five things. It takes me 3 to 4 seconds. That's all it should take. 5 things. Ready to go. Number one. Where's the high? That's not too difficult. Number two. Where's the bottom? Right there. Number three. Where was it a year ago? Right there. Number four. Where is it today? Right there. And number five. That's the hardest one. What's the direction? Down, up. Whoops. Up, down. What's going on here? This is what we want to look at. That today, yesterday, and the day before. That gives us an idea of where we're going next. And that is heat. Two things that I just for me. Okay. Agree. If you want. You don't have to. You don't want to. I like to have odds and probabilities in my favor. Okay. That means if I know something that is going to be advantageous to my trading to be more successful, that's what I want. So the reason this show is called Dividend Stock because we want dividend stock. Specifically those dividend companies that are consistently profitable year after year. Second, we want to know when they're going to move. Well, great. Knowing when they're going to move and which direction they're going, and the odds and probabilities in our favor makes it favorable for us to be profitable more consistently. And that's what I'm doing. Now I'm sharing information for free, unlike what some people think. I'm not asking for anything. I'm not going to try to sell you anything by the end of the night. I'm not going to say, hey, if I get a good deal, if you order two, the price one. No, I'm not going to do that. I'm just going to show you and answer questions. This is not advice. This is tips. This is just making observations of stocks that you guys like to look at. That being said, first one, target. So I don't mind this right here. Okay, it looks like bottom of the year. Well, here's the thing with the bottom of the year. You make money in the stock market buying low and selling high. And I hate to be the bad news, but there's no way possible you're ever going to get lower than the low of a year. And that was yesterday. Yesterday, the bottom of the year. Or was it? Now, me personally, I like 2 days to the upside after a bottom. So look at this. Here we are right here. Let's zoom in and see what the last 30 days looks like. Because the last 30 days is going to give us a good idea where do we think it's going next. Boo you too. I'll take a look at Colgate Palm a little bit. Shouldn't have bought Bitcoin. Yeah, okay. Those lenders are diabolical. Yes, they are. Ask Trump insider trader. Thank you, Carlos. Stock going EX today. Gary, which one is that? I just have to give you money to debit double. Nah, I don't know. All right. These are diabolical, blah. You should have invested in precious metals. I'm going to disagree with you. I've never seen a precious metal to give me any kind of return. Seriously. I got little bits of silver, gold here on my desk, and once has anyone come by and say, here's a little bit for you this week. Here's a little bit for you this week. No, it doesn't happen that way. It's a dust collector paperweight. Don't get me wrong. It's a storage value. So if you buy a block for $1,000, well, in 10 years, 20 years, it might be worth $1,500, it might be worth $2,000. Who knows? Okay? It's storage value. It goes up as everything else goes down. Okay, fine. But it doesn't give you cash flow. Now, I'm 61 years old. I'm retired. So the income that I have coming in, it's not from a trust fund. No, it's not from Social Security. It's from working since 1973 till 2 years ago. 5 decades. I've worked 50 years of my life to get to where I am today. Now, Enoch knows telling me what I did and what I didn't do. Anyway, besides the point. So the bottom was 2 days ago. Monday was higher. Today was higher. Okay. Is it going to continue going up? Well, we don't know. Because although Monday was higher than Friday, today we have a lower bottom than yesterday. We also have a higher top than Friday and today. So could it be the bottom? There's your 2 days right there. I would look for a third day, which be tomorrow, and that entry point if I like target. Which I do. But here's the thing. I don't like target going into earnings or going into dividend. Where was it? was I? Right there. All right. You don't know anything. Absolutely. Aiden says, I don't know anything. Aiden, you're absolutely right. Andrea, how are you today? Get out. What do you mean get out? I have no idea what that means. Okay, Andrea, no idea. Can you explain what get out means? You put something here. So you might be thinking something. I'm kind of curious what it is. All right, so that being said, here's target. Now I do like target. Let's take a look at a safe trade. Now a safe trade, in my humble opinion, is the covered call. So you buy the option, you kill premium. Okay, we don't have to wait for the stock to get our profit. 1% is all I'm looking for. 1% a week is 1% per year. Okay. That being said, 88.996. So we'll be looking at the 89s right there. 89. And that's going for 118. That's more than 1%. Now, for those of you that have never been here before, this screen behind me, this screen right here is called Think or Swim. It's just a trading platform. It's nothing that I came up with. So don't think I'm that smart. I'm really not. Okay, I came up with strategy for my 9-year-old daughter, and it just happens to work good. So I keep using it, and it keeps working. So I come from that time frame. If it ain't broke, fix it. If it's working fine, leave it alone. Okay. Unlike people nowadays, your computer is now updated. Well, I didn't want my computer updated. Your iPhone's now been updated. Enjoy the new crap. I didn't want that either. Just leave my crap alone. Anyway. So if I like Target, which I do, I would buy it first thing tomorrow morning. I'd turn around the exact like a tenth of a second after I would turn around and sell a covered call. Basically sell someone else the exact same price I paid for. Here we go. It's 88.96. The closest strike price to 88.96 is 89. That's going for 118. So for the fun of it, let's start off the night with a stock target. It's not a tip. It's not a suggestion. It's not a recommendation. It's an observation. Crazy man, want to take a look at it. Let's take a look. Now let's get rid of this. Let's open up covered call because that's what I want to do. If you don't know what a covered call is, there are literally hundreds of videos explaining what a covered call is and how to do it. How safe it is. Remember I said simple, safe. It's so safe that the federal government allows you to do a covered call in your IRA. There's a lot of trading strategies you cannot do in your IRA. However, a covered call is one that you can. Now also, if I'm going to explain it a little bit more. I'm not sure if I can do 2 hours tonight. Here we go. The 89 right here. So let's buy 89. See what it looks like. Now I don't want to do 10 contracts. I mean, that's why I have it preset for. But you guys just do one at a time until you understand what's going on. This is the trade right here. Let me read it to you. Buy one covered call target. 100. That's the weekly. 17 October 25. That is this coming Friday, 4 days away. The $89 call option at the market to open. Now, here's my profit right here. Do you remember when I said simple, safe, predictable? Do you remember that part? Predictable. Well, I know exactly what I would have made before the max profit. Before I even do this trade, I know what my profit's going to be. Unlike those people who want to buy a stock and wait for it to move. Well, it may take a day, a week, a month, a year for it to move enough for you to make a decent profit. Well, if I'm only looking for 1% every week, I'm selling it for the same price I bought it for. What I'm collecting is this right here. That is called the premium. It's an insurance policy. Now, we all know what insurance policy is. If you have a car, you have to have insurance. If you have a house, you have to have insurance. If you have health, well, you have to have health insurance. If you rent a house, you need renter's insurance. So what's involved with an insurance policy? There's 4 things. Beginning date, ending date, consideration, and meeting of the minds. Those are the 4 requirements of a legal binding contract. The agreement, meeting of the minds. That's the technical term. Meeting of the minds. Just an agreement, that's it. I'm doing something, you're agreeing to it, right? That's meaning of the night. Consideration, that's money. Or a handshake, a piece of pie, a date, whatever, a cup of coffee, anything of value can be considered as consideration. But in this instance, we want cash. We want cash flow. So in this instance, $124 per contract is the profit for this trade. So let's see exactly what that comes out to. So maximum profit, $124.50. Cost of the trade, including commissions and fees, $8,776. Okay, so if you don't have enough money to trade with $80 stock, $90 stock. Look at a $5 stock, a $4 stock, a $3 stock. Whatever can fit in your budget. And if you can't do that, you're just starting out, you can always do what's called dividend capture. It's simple, it's safe, it's predictable, and you can do it over and over again. All right. So to find out the rate of return, take the profit, we divide it by the investment, and that gives us our rate of return. So that will be in the calculator. Okay, the profit is $124.50 divided by the investment, which is 87.76 comes to a grand total of 1.4% for 1 week. 4 days, actually. Had we done it yesterday, we might have gotten a little bit more money because if you didn't know it, there's 5 days in a week. Come on, we all knew that. But here's the thing. Monday is already gone. So we have 4 days left. So Monday being gone, you now have 80% of the time value for this week. 5 days is 100% of the time value. Monday morning 9:30 a.m. Friday afternoon 4 p.m. That is the maximum amount of time you can trade during the week. Okay, 9:30 to 4 on Friday. Well, the maximum is Monday, Tuesday, Wednesday, Friday. That's 5 days. 20, 40, 60, 80, 100% time value. So Monday's already gone. So you already lost 20% of the time value. That's why I do all my trading on Monday morning. Okay, by 9:30, 9:40, sometime in that area, all my money's gone. It's all invested. Now I get money every single week, 1%. So if I have 100,000, I get 1,000 a week. If I have 200,000, that's 2,000 a week. 500,000, 500 a week. 1% per week is my goal. That's my goal. You got to figure out what's for you. You got to figure out what makes sense to you. All right. So 1.4% for target. Yay! Target. Next was what was next? Right. UPS. Crazy man wants to UPS dudes. All right. So the question would be, okay, before we go on, what's the question? Do I like Target? It's a valid question. Think about it. Do I like Target? Am I willing to buy it until it hits my target? What's my target? My target's 89. What's that now? 88, 96. So what's the odds and probabilities of 89 by Friday? We're talking 4 cents. And here's the bottom. Now she's going up. Is that guaranteed? No. There's only 3 guarantees in life. That's it. Most of you know 2 of them. Very few of you know what that third guarantee is. All right. UPS is next. Let's take a look at the ups dudes. The boys in brown. UPS. Almost the exact same thing. However, today is the bottom of the year. You cannot get any lower than the bottom of the year. And that, my friend, is today. Now, I've never ever picked a bottom because I'm not bottom fishing. I'm not. I could buy it tomorrow, but it's not the bottom. It's not the bottom anymore because the bottom was here at 82. Now it's at 84. Okay. So I'm not going to do UPS only because it doesn't fit. I don't buy at the bottom. I want 2 days to the upside, which means tomorrow, maybe Wednesday, Thursday will be the earliest I get into it. By that time, I don't have any money left. So next week, I saw something. All right. Next. What do we do next? Do curls. Jacob, what is CURLF? I never heard of it. Jacob, if this is going to be one of those, I don't know if you're new here because there's a lot of Jacobs that do drop by. I like companies that are consistent. That's number one. Number two, weekly options only. Number three, you got to have dividends because the name of the show is investing for weekly cash flow. So I'm hoping. See, I've never heard of it, which kind of makes me think that it's going to be a no. Right off the top. That's a no. Let's find out. CURLF. Hell no. Come on, Jacob. There's no options whatsoever. How much money do I need to make $1,000 for my expenses? $100,000. No, wait a minute. 250 grand. No, wait a minute. $1,000 a month would be 250,000. No, wait a minute. That's not right either. 1,000 a week is 100,000. Okay, BP. 100 grand, 1% a week is $1,000 a week. Roughly. All right. What do we have next? BP. How do I reach my kid? He is 15. It's friendship necklace. I couldn't tell you. Because my kids. My 9-year-old was interested. The other three weren't interested. Okay, the boys, no interest in money whatsoever. See, that was my own fault. They could have whatever they wanted. See, I had nothing. Literally, everything I have, I busted my ass to get. Okay, contrary to popular belief. Some. Okay, so. My children were used to growing up. Everything. So how do you get them to realize the value of a dollar? Well, you can't figure that out on their own. Now they're yelling at me. Dada, shut the refrigerator door. Take what you want. Get a glass. Don't drink out of the cotton. Turn the lights up when you leave the room. Close the door. We're not heating outside. This is all the exact same stuff I said to them growing up. Now they're saying it to me because they have their own houses. Okay. All right. Jedi doesn't care. All right. Miss Diane. Stephen Engelson. Adam. Huge shift today. I bought the dip. Your method is safer. Keep up the great work. Thank you, Adam. Austin. What's up, brother? Hot toddy. Ooh, I like a hot toddy. Definitely clears out the sinuses. BP. Thank you for the hash mustache. It was nice of you. Hattie Banker. Okay. Yasmin. Good evening. Coach Khalif. Love the energy. Way to go. This is defense plea. Thank you. Respect. Thank you. Got it. Good for you. Good job. Adam. Shifts today. We already saw that one. Thank you. What do we got? Grand. Leo. How you doing? Comanche. How you? J. Abby. How do you find high return options? Okay, J. Abby, you're asking me the wrong question. I'm not looking for high return options. I'm looking for safety. I'm looking for predictability. I'm looking for consistency. I have two goals at this point in my life. One, consistency and profitability. Two, preservation of my capital. Unlike popular belief, contrary to popular belief, I don't have the luxury of being wrong. I'm not working anymore, which means I don't punch a time clock. So I get to if I feel like it, lay in bed until I'm done. Wake up, go outside, my garden, the dog, for a walk, sit and watch my fish. Whatever I feel like doing. If I don't feel like doing anything, I don't have to. But the question should be asked, J. Abby. What is it you want out of this adventure or this idea, this platform? What are you looking to learn? What are you looking to find? Okay, so high returns. If that's looking for high returns, only high returns, you're definitely in the wrong place. Now I don't mean to sound rude, but I'm looking for safety. predictability, consistency. I'm looking for stuff that is boring as hell, monotonous, almost drive you crazy, that it moves so slow and the profits are so tiny. But here's the thing, Mr. Abbey. Okay, with a tiny little profit of 1% per week, that does come to 50% per year. And I am perfectly okay with 50% per year. So you have to figure out what it is you want. You want higher profits than that. Well, there's plenty out there. There are plenty of guys just like me teaching their trading strategy. They're looking for something different. I'm looking for safety, predictability, consistency, and preservation of my capital. Okay, if I lose, if I have to go back to work. Good evening. Welcome to Walmart. How may I help you? Oh, yes, that is an item 15. Enjoy your shopping. Come back and see us again. No, that's not me. I'm not very good with corporations. I'm not. Okay, so my working days, I was the CEO. Would you believe I was the CEO? I had 26 employees. Do I look like that? Do I really look like a person of authority? Hell no. People will walk into the shop and say, hey, where's the boss? They go, that guy. I go, what? That guy? Yep, that's me. I'm that guy. Anyway, let's keep on going. Lead 3067. How you doing today? Okay, 815-118-1985. ULTY, do me a favor. Before I look at ULTY, I want you personally to go find out for me before I look at ULTY and tell me how many years in a row consistently increasing their profits without skipping, without slowing down, and without going backwards. ULTY. Go, find out, come back, let me know. Does this thing have 2 decades of profits? Let's find out. Anna, Verizon, I do. VZ, here we go. Ooh, check that out. Now I'm looking for five. It takes me 3 to 4 seconds. Are you ready? High, low. Was it? Look at this. Down. Right there. It's not the bottom of the year, but it is the bottom of the last 9 months. So this thing shoots up, comes back out here. Let's zoom into that and see what's happening. But before we do. Wait a minute. I didn't go over the 5 rules. I did the 5 criteria. Simple, safe, consistent. That's 5 criteria. 5 rules. You ready? Rule number one. Never buy something you don't want to hold for a long period of time. Number two. Never sell at a loss. It defeats the purpose. Think about it. Why we invest. We're not investing to buy something last. That just doesn't make sense. Rule number 3. Now this one I find absolutely baffling. Because you're gonna see tonight people are actually putting their hard-earned money into something, and you'll be scratching your head saying, what the hell are you thinking putting money into that? So rule number 3 is make sure the company is consistently profitable. Now the reason I told 819-885 to go check out ULTY because somebody asked me about that almost every single night. I waste my time explaining to someone that they should have done their own homework. ULTY is not 20 years old. It does not have 20 years of profits. I don't want to look at it. You want to buy it? You buy it. More power to you. That being said, let's keep it on. Yay! All right. Oh, so Verizon. Let's zoom in before we do. I wasn't finished yet. Rule number 3. Make sure the company is consistently profitable. Now, for personally, I want 2 decades. Okay, that's not 2 years. That's not 2 months. That is 2 decades. 20 years. Now you may be 20 years is a long time to profit. No, it ain't. Stock market has been around for 430 years. That's a long time. 400 years. So looking for a company that's profitable 20 years shouldn't be that difficult. As a matter of fact, there's over 300 companies that are consistently profitable, just like that. Hope you got a pen and paper. Here they come. Ready? Here they come. Dividend Kings. Dividend aristocrats, dividend champions, dividend contenders, and Warren Buffett's list. Those five lists right there will give you more than 300 companies that are consistently profitable. You want how to find them? Google. Dividend Kings list 2025. Search. Warren Buffett's list 2025. Search. Simple, just like that. Boom. Within a couple of seconds, somebody's willing to give you those list of stocks. Okay. So rule number four. It's taking me a while to get to it. Sorry. Rule number four. Weekly options only. I don't do monthly. The numbers just don't work. Someone's gonna ask me. I just know it. Every single night. They always ask me. Let's take a look at this stuff. I don't do monthly options. The numbers just don't work. That's it. Okay. And rule number five. Make sure all the numbers work. What do I mean by that? What do I mean by that? All the numbers. Uh-oh. What the hell? What the hell was that? I have no idea. I moved. Everything just. All right. When I say all the number, that's funny. The number one number. The main number. Anytime I turn on chart is this one right here. 40, 55. It's there 4 times. Well, that's the number I'm looking at. That was the last trade today. So hypothetically speaking, the stock should open up relatively same area tomorrow. 40 tomorrow. 50, 55. So the closest strike price to 40 to 45 is right here. 39.50, 40, 50, 41, 50, so on and so forth. The closest one to 55 is going to be 50, and that's going for 37 cents. So you know what I said to that one? Next. Sorry, Anna. Okay, as much as I like Verizon, it's only offering 37 cents on a $40.50 position, which is less than 1%. Okay. Well done, my friend. 50 years is impressive. Oh, thank you there, Lopegs. But I didn't even try. Okay, I just woke up and went to work. Think about it. You go to work. You wake up one day, and all of a sudden it's like 50 years has gone by. It's like, shit, am I really this old? I wasn't planning on being this old. It just happened. Stocks on demand. How are you today? You're new here. That name I would remember. Lopez. Yes. I heard of this through TD. Okay. Thank you. LED 3067. How are you doing today? Some Tung Fu. Interesting name. All right. I got my tea. Hopefully that helps. I'm not used to talking so much. Can you do your IRR in your 401k? Absolutely. Now, here's what I would do. This is what I would do. I'm not telling you to do this. This is what I would do. Okay. First of all, find out who is managing your 401k. Number two is the company matching your 401k. If the company's not matching your 401k, you should probably put it someplace else in your own care. Okay. Basically, you don't know anything that get out. Ashley, hi, how you doing, Ashley? 401k, if you cannot self-direct it, then someone else is doing it for you. Okay, so my opinion, this is just my opinion. It might be a fact, but it's also my opinion. Nobody has as much interest in your money than you. So do you honestly think somebody else who's getting paid to take care of your money has your best interest in mind? I don't think so. So when you get to my age, on this side of the fence, this side of the fence is we sleep until we're done. Do whatever we feel like it because we put our time in. Okay. You got to put your time. You got to pay your dues. Steven Tyler. Everybody's got their dues in life to pay. Remember that song? That's my favorite song. Dream on. Everybody has their life and pay. You have to pay your dues. I put in 50 years. Okay, how many years are you putting in? And what are your plans? Once you get here is retirement. For me. Okay, 2 years ago, I said, what do I want to do? Someone told me, why don't you do some TikTok videos? I said, what? You showed me how to do it. Cool. Let's give this a try. I was dead set against not using it. TikTok is for kids. No. Anyway, let's keep on. Can you do your 401k? Benji, how you doing? Benji, sorry. DJ, what's going on? Oh, wow. Where are we? 1,000 a week. We have 52 weeks a year, 52,000, blah, 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 blah. Where are we? Wow, these questions. All right. Right there. There we go. Could you do 401k? Yes, you can. Jake Claver, thank you for that, Jake. Angie, how you doing today? Crypto Sensei. How you doing, Crypto Sensei? Duce, are you selling the money? Yeah. Okay, Duce. I always take a look at all of them. In the money, out of the money. What direction is the stock going? What looks the safest? For me, I'm more interested in safety rather than profitability. Okay? If I get 2 or 3 opportunities, I'll do the one that is safest and still gives me 1%. It's always about the numbers. What am I buying it for? What am I selling? What's the momentum of the stock? What are the other buyers? See, the reason why we look at the 1 year chart first is we look at what the other buyers and sellers are doing. Okay, it went down, it went up. Now it kind of went sideways for a bit, up, down. Right here is what I want to take a look at. But Verizon doesn't work only because the numbers just not that favorable. So next. Scotty, what's happening, Mr. Scotty? Whirly Ziller. Scott Teal, what's happening? Dumb down. Okay. Crazy man, thank you. You're welcome. M4. Oh. Mason Mount. Pick up AMD. Advanced micro devices around a month ago. Grab trip lev VIX. I grab triple level VIX Tuesday massive win. All right. Good for you. Not quite looking for, but all right. Let's take a look at AMD. Advanced micro devices. Hell no. Wasn't that quick? The reason why I'm saying hell no. She's down here. Okay. Down, up. Now she's going up like this. Big huge gap. Big gap that size going from 160 to 240. That's $80. That's $80. $80. Think about it. $80 at 160%. That's a 50% increase between here and here. Jumped 50%. What do you think is going to happen next? Seriously, think about it. We're down here, 160. It goes up to 240. That is $60 increase. $60. I love that. $60 increase on a $160 increase. $80 increase, $160, 50% This baby's coming down. Eventually. Okay, I don't buy. Look at the high. It was just last Thursday. This is my quant. Alrighty, good for you. Dan, your day off. Today is Tuesday. My day off. Saturday. What's the risk? The whole amount invested? No, Leah. Hold tight, Leah. All right. Miss Leah, that's a very good question. I'm assuming you're into investing. When you're investing specifically in dividend stocks, primarily those companies that are 5 decades or older. That's 50 years or older. Okay, Bank of America over 100 years old. Coca-Cola, Pepsi over 100 years old. Okay. Procter and Gamble. Wells Fargo, Capital One Finance. I can keep going on. These companies over 100 years old. Now the risk, Leah, comes when you hit the wrong button, or you sell at a price you did not want to. Dingle nut. If I were to invest into a company, what I do a company that is small but getting bigger, or a company that is big but might die down. Okay, dingle nut. I'm not sure what you're getting at, but here's the thing. I'm only looking at companies that are consistently profitable over 5 decades. That means they've been in business for over 50 years. Which means they've seen a lot of crap. Think about this. What have we seen in the last 100 years? World War I, World War II, Vietnam, Korea, the Gulf, Afghanistan, Iran, Iraq, all that bullshit over there. And then we have the stock market crash 29, 87, 2000, 2024, and this year. That's as far as the top of my head. We also had the Great Depression. We also had the Dust Bowl. We also had the oil embargo. We had a lot of crap happen over the last 100 years. Yet Coca-Cola, Bank of America, Wells Fargo, Pepsi, Procter & Gamble, Colgate, Palmolive, Clorox. These companies over 100 years old are consistently profitable year after year, even through all that crap. So Leah, the risk would be you doing something that you don't understand, hitting the wrong button or something to that effect. Okay, that's just basically what it is. If you buy a good company, let's say TNT, okay, General Motors, IBM. If you buy a good company at a good price, and you never sell it below what you paid for it, you're not risking anything. Okay. Do the stocks move up? Yeah, they move up. Yeah, they move down. That's all they do. The idea, Leah, you're new here, is find something that you like. Find something that you understand. Okay, do you understand who ExxonMobil is? Colgate, Palmolive, Clorox, IBM, TNT, Home Depot, Lowe's. Do you know who these companies are? Do you think these companies are going to go out of business? Okay. Have they been profitable year after year? Okay, I can't say anything to make you feel better about your situation. You're the only one to know what is risky for you and what is not risky for you. I did the same thing with my older daughter. She's 27 now. Well, here's the thing. At 9 years old, Daddy, what are you doing? Can you teach me? Well, it was great up until she was 11, 12. And then when she hit 13, she wanted nothing to do with Dad other than Dad's wallet. Dad was the walking ATM devil. Daddy, can I have money for this? No, I don't want to do that. Daddy, can I have money for this? No, I don't want to do that. That's the way it was. Girls, don't give me a lot of crap about this. Okay, it was actually my experience. When my daughter hit 13 to about 24, I was the devil. She wanted nothing to do with me. Now that she's older, living on her own, pay her own bills, light bulb comes on. Oh, wait a second. Anyway. So hopefully that makes sense. KB, how you doing? IMG, how are you? Do say $1,000 a week. We have 52 weeks in a year. That's annualized to 52,000. Simple interest, yes. But if you compound it, it's more like 64. Eric, how you doing? Zilly 6. I'm looking for risk. Alrighty. I don't have no idea what kind of risk you're looking for. 50% is crazy high. I'm not looking for 50%. I'm looking for one. One at a time. That's all I'm looking for. G-Man, what's happening? I crashed 44. How you doing? Just beard. Just a beard. Are you referring to return on capital at risk or total portfolio value? Wow, just holy cow. That's a great question. Hold on one second. Now, I don't know if any of you guys realize this. You just can't for 3 hours every single day. Well, 3 hours at night, 2 hours in the morning. That's 5 hours a day. Just continuously talking. It gets to your throat after a while. And how do you adjust for theta decay if the trade goes against you? Just love those ideas. Love those questions. Those are great. All right. All right. Hold that thought. Hold that thought. Let's look at Occidental Petroleum. OXY. Not that one. How about Schlumberger SLB? That's a good one. Let's look at this one. All right, Justin, you ready for this? All right, Justin, you ready? Schlumberger. Dividend King. 5 decades of increased profit. All right, here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Okay, down, down, sideways, down. What's down? What? Not quite the bottom. Not quite the bottom here. Bottom's here. This is pretty much the bottom for the last 6 months. So let's zoom into that. All right. Justin. Okay, Justin. This is 30 days. Anytime I get any chart, I'm still looking for 5 things. 1, the high. 2, the low. 3, where was it? 4, where is it? And 5, what's the motion? The ocean, the path through the woods, the trail, whatever you want to call it. What are the buyers and sellers doing? Here's the high right there. She drops, traces again. Now you have 1-2 days up. Okay, the bottom's right there. Now she's going up. Okay, how much is it going to go? Don't know. Let me continue. Now, I like Schlumberger because it is a dividend king, increasing them profits for more than 5 decades. I'm good with that. Currently, the price is 32.57, 32.57. Closest strike price at 32.57 is 32.50. 32.50, and it's going 72 cents. Now, if you don't know right off the top of your head what is 1% of 32.50, it's 32. $32.50. $32. $32.32. 1% of $32 is 32 cents. You're just moving the decimal point two places. That's it. So I'm looking for 32 cents per share. So I get 100 shares at $32. 1,000 shares at $320. 10,000 shares at $3,200. It's all relative to how much money you have to work with. You get 10 grand, fine. 50% is 500, is 5,000. You get 20,000, 50% per year is 10,000. You get 100,000, 50% a year is 50,000. You get a million, 50% a year is 500,000. It's all relative. 1% is 1%. How you look at it. Okay? So 72, I like that. Let's go through it and just see if you can follow along. Okay? Let's get rid of this. Let's do a covered call. Right there. And the 32.50 right there. One contract right there, and right here we go. Here's Johnny. You ready? Buy one covered Schlumberger. 100 is the weekly. 17 October 25 coming Friday. That means whoever is at the end of this equation. If I'm buying, I'm selling it to someone else. I have no idea who it is. Someone is buying it. Okay, if the market maker posts it, he has to fill it. So 32.50. Call off against Schlumberger. Let the market to open. Okay, here's the profit right there. Maximum profit 69.50. Cost of trade commissions and fees 31.81. Let's do a little bit of math to see what that comes out to. 69.50 divided by 30. 1 grand total of 2.18% for one week. 2.18% for 1 week. Now, if 1% of 50% a year, 2% a week is over 100% a year. Well, 2.18 is more than 100% a year. Now, that's just for this one trade. Okay. Okay. Now, Justin. I have no problem whatsoever. Let's do this. Let's adjust this right here. Let's edit this. Now, I want to 10 contracts. Okay, 10 contracts is me cost me 30 grand. Okay. Now, I'm making $695 bucks. $695 bucks by 10 covered calls of Schlumberger. 17 October 25. The 32, the 50. Nothing's changed except the quantity. The profit is now 695 and it's 31 grand. All right, well, let's do this. 695 divided by 3.1 comes a grand total of 2.18. It's the exact same rate of return, but a larger number. So what I'm doing is I'm taking $100,000, 5 positions, 20,000. Out of those 5 positions, I want to gain $1,000 for a week. So 1, 2, 3, 4, 5. Okay, each one giving me 1% a week. Okay, 1% of 20,000 is $200. Yeah. 1% of 20,000 is $200. So if I get $200 trade, okay, that's over $1,000 for 1 week, $1,000. So if I have $50,000, I want $1,500 a week. So whatever my portfolio is, if it's $300,000, I want $3,000 a week. That's my goal. 1% a week. Okay. Does that make sense? But here's something, Justin. Okay. That's what the rate of return is. If it was all cash. Okay, 31, 811 is all cash. If Justin, if you do margin, which I do because I've been doing this for a long time. I understand margin. And before I go on, let me reiterate, make me sound a little bit louder. Do not do margin until you understand the risks involved with it. It's not advice. It's just an observation. Okay. So this is my scorecard. Everything I need to know. If I'm doing on a margin, I'm not putting up 31. I'm only putting up 15. So let's see what the rate of return is at 15, Justin. Okay, it's clear. The profit's still the same. 695 divided by 15,511. Okay, divide 15,511. See this, Justin? Now, that exact same trade, I'm getting 4.48%. That's 4.5% for 1 week. Now, there's risk involved. Okay, the risk is margin. I'm borrowing someone else's money, which means I'm paying for someone else's money. So the margin that I'm paying for getting old is no fun. It ain't. The margin I'm paying for, Justin, is 8% per year. I have no problem paying 8% per year. As a matter of fact, I'll pay up to 20% per year to borrow someone else's money. Because I've been doing this long enough, and I feel confident enough with what I've been doing. So 1% a week is 50% per year. And that's the total value of my portfolio. If I got 100 grand and I want 1,000 a week, that's over 50% per year. That trade like this gives me 4%. That gives a little bit of leeway for other stocks that aren't giving me quite 1% that I'm still hanging on to. So I hope that made sense, Justin. Let's go. Who's next? That feed gal. What's your thought for a call on AG? That feed gal. I don't buy options. I only sell them. But let's take a look at AG. What is that? By the way, I have no idea. It doesn't sound familiar. Let's get back to the beginning. So we can pull up AG and go from there. AG, which is first majestic silver. Why the hell am I looking at this? Hell no. I'm sorry, kiddo. I don't buy anything at the high. Okay. Okay, a year ago, 6 months ago, we're at $5. Now it's up to 13. Okay, that looks like take a look at this. From here to here. All of that right there is begging for profiting. If I bought something at $5, and now it's at 13. Here's the thing. It ain't a profit until you take it. Nobody ever went taking profits. Okay, so if you bought it 6 months ago here, and now it's up here. You can do whatever you want. Jim, Mr. Hand. If I'm here and you're here, isn't that our time? Sure, why not? Oh. Armanani. AWR. That's a monthly. AWR. Yeah, I don't do monthly. The numbers just don't work. October, November, December, January, March. No. See, monthly is one trade per month. That's why it's called monthly. So if I'm making 1 to 2% per month, that means the most I'm going to make at the end of the year is 12 to 24%. Why would I want to do that? I can do 1 or 2% every single week and get 50% to 100%. So I just don't do monthly because they just don't pay enough. That's my opinion. You want to do it? You have at it. Ooh, Jen Pika. How you doing? Haven't seen you in a while. Or behavioral mispricing. Okay, Mason Mount. I have no idea what behavioral mispricing means. But Jen Pika wants to take a look at IBM. I'm going to say no to IBM quickly. Here's the reason why. Your 30-day bottom is here. She shoots up. Here's your 30-day top. Now she's coming down. Why would I jump into something that's coming down? Why don't I just wait for it to find the bottom wherever it's going to be, and then get into it there? No, don't get me wrong. I love IBM. As a matter of fact, I own some IBM at $285. I have no intention of selling it because it gives me a premium every week. PH. Is that Parker Hannafin? Yes, it is. Parker Hannafin. That's a no. I don't do monthly. October, November, December, February. No. Do you offer a class? Camus? Yes, I do. Okay. On the top left corner, just go to the website and just all the information's there. I promise I'm not going to try to sell anything. Okay, so I'm not going to try selling. We're all adults here. We know how it works. You go to the bio that tells you everything you know about me, my company, how long I've been in business, blah, that kind of nice fun stuff. WHR, come on, that's Whirlpool. We know that's a monthly, and so is GPC. How often do the calls get exercised in your experience? But once every 3 months? Very rarely when my stocks get taken away for an exercise. Do you hold any stocks long term? Now, my idea of long term is 30 days. Okay, the longest I've held anything was KSS Kohl's. I held it for 14 months. Before that was 9 months, and that was Kimberly Clark. Now, there's two different reasons. Kimberly Clark dropped like a rock. Don't get me wrong, I still covered against it while it was down. It recovered. Kohl's gave me 1, 2, 3% every single week for 14 months. 14 months. 1 to 2% every single week. So I just kept on holding it, buying it, rolling it over. And if you're interested in rolling, that's a little bit more advanced. We'll talk a little bit later. US user AJ. Hello. Dr. Hoover, how are you? C-wide spinner, what's going on? Everything is tonight. Okay. I put in 3 years and got funded by YC. I have no idea what YC means. Mike wants to take a look at DraftKings. Now, Mike, I'm going to tell you right now, DraftKings has not been around for 2 decades. The profits just aren't there. I don't even think they have dividends. But high, low. Where is it? Down. What's going on right here? Let's zoom in. Last 30 days. Okay, what do you think, Mike? Here's your high. She drops to the bottom right there. It's going sideways here. Not quite back up yet. But we have two days here. Monday and today. Going up. And it's at 34.6. The 34 is going for 86. The 35 is going for 40. So either one of those is going to be fine, depending on which one you like. But the thing is, Mike, I wouldn't do DraftKings because it hasn't been around long enough. It doesn't have the consistency of profitability that I'm looking for. Let's see how long my voice holds out. Let's keep on keeping on. Do I offer classes? Yes, I do. I'm glad to learn from you. You're a great mentor. Thank you, Mr. Jake. Uh-oh. Nico wants to take a look at SCHD. I tell you what, Nico, before I take a look at SCHD, please do me a favor. Go find out how consistently profitable SCHD is, and then come back and tell me, take a deep dive into anything you want to know about it. Until then, I want you to do a little bit of homework. Because I've looked at SCHD long enough, I don't want to look at it again. Steven, VMC, all-time high. It's an all-time high. Why the hell are we looking at it? Think about it. Why the hell are we looking at this? Where's the opportunity? Okay, there's no opportunity to buy something high ever. It's never been this high before. So why the hell are we looking at it? Anthony, how you doing? Beauty Lounge. Good evening, Beauty Lounge. How are you doing? SB 1981. AGNC. Now, don't get me wrong. I don't like AGNC. Nothing to do with the company. It has to do the market maker. Look at this right here. 0. Okay? If you are not right, you get nothing. Ever. You only get money on AGNC if you are right. The current price is $10. $10.08. Not even 1%. Ooh, M-HODS. Gap. GAP. Interesting. Ooh, look at that. 2 to 3 seconds. Ready? High, low, was it? Okay, down. What's going on here? 2063, the 2050 is going for 32. Hell yeah, why not? Or the 2021s. They're going for 2023. Now the 2021s can be more profitable. But the 2250, that's going to be safer. So here's the part where you have to choose. Do I want safety? 1%? Or whatever it's going to be, or do I want profits and go for something different? How can I earn $1,000 a week from investing $100,000, please? 1% per week on $100,000 is $1,000. So look at me. You know, I'm not saying everybody that's his name. Whoever that is, look at me. Okay. If you just sit and chill, you're new here. I definitely remember that name. Just sit, chill, observe. Okay, all the answers. It's kind of like a movie. Everything will come together by the end of the movie, and everything will make sense. Okay. So gap. Everything looks good. So the last days, what's happening here? Okay. Here's the high. Here's the bottom. 2 days to the upside. The third day will be tomorrow. So if this thing hits 2064 tomorrow, that's where I would jump in. Getting old fun, really ain't. Right? The older you get, certain things just stop working. They don't work like they used to. I wasn't quite ready for this 62-year-old bullshit. I wasn't. Okay, growing up all my life, so used to doing this. All of a sudden, I just can't do it anymore. Not that I don't want to do it anymore. Not that I physically can't do it anymore. It's the recuperation. See, I go play soccer Saturday. Okay, and it takes me 2 to 3 days to recover all the bruises, all the cuts, and all the it takes me 3 days to recover. I used to be able to do it every day. Now, so much anymore. Okay, so M holds. M holds. Let's do this. Let's do the gap at 20, 50. Okay, down to cover, call. So look at me. Ready for this? This is just to give you an idea. It's called a covered call on a good quality company. You got to ask yourself, do I like the gap? Then you got to ask yourself, do I like the gap at $20.63? And then the next question is, am I willing to buy it at $20.63? Never ever sell it at a loss. And then just keep doing it every single week, getting 1% every week. So 1% a week is over 50% per year. It's a simple strategy for my 9-year-old. You know what? After we do this, I'm going to introduce you to the 9-year-old. So you can say, oh yeah, there she is. Okay. Covered call, 20, 50, right there. Okay, one contract, right there. And let's do here we go. By one. Covered call the gap. 100. 17 October 25. That's this coming Friday. $20 in call option. So I'm basically buying it for $20.63, selling it for $20.50. Now who caught that? I'm buying it for $20.63, and I'm selling it for $20.50. And I'm still walking away with a profit. Do you see that? So I could buy it tomorrow morning, sell it Friday, walk away with a profit, and then do another company on Monday. Well, that's exactly what I do. Every single week I look for opportunities like this. First question is, do I like the gap? Do I like the gap at this price? Am I willing to buy it and hold it? Never sell it for less than I paid for it. Except for this instance, because the 2050 is going to give me this profit right here. It's not huge. It's only $30 per contract, $2,000. So what's the rate of return for this one particular trade? And if you like it, you can scale it up. One is $30. 10 is $300. 1,000 is $2,000. So it all depends on how much money you got to work with. Now look at me. You got $100 grand. So this trade right here is only $2,000. So let's say hypothetically you do 10. Okay, so 10 contracts is $20,000. And your profit would be $300. So $300 on 20. So let's see what the rate of return here. Okay. Calculator. $30 and 50 cents profit divided by the rate. What do you call that? The cost of trading commissions and fees. $2,000. So the profit is 1.5% for 1 week. Now, if I'm looking for 1% a week, great. This trade right here for the gap is giving me 1.5%. Well, 1.5% is what? Is that like 75, 80% per year? Let's multiply by 52. This is 52 weeks in a year. 78%. Well, I'm good with that. I don't know. All right. Let's go out of here. All right. So in your instance, 10 contracts. Whoops. All right. 10 contracts. Okay, here we go. See? Profit. $295. 20 grand. Okay. Calculator. 295. Divide. 20 grand. 211. Grand total of, look at that. 1.4%. Exact same. Okay. 1.45. Same return. One contract. 20 contracts, still 1.4%. 1% per week is still 50% per year. Berzer. How you doing today? Do you hold any stocks long term? No. Every single stock I have Every now I have seven accounts. I share three of them publicly. Okay, hold on a second. I told you I was going to share this. Let's share some stuff. Some stuffy stuff. Oh, why isn't that popping up? Why isn't that popping up? Get rid of that. Get rid of this. Get rid of this. Get rid of that. Get rid of that. Get rid of this. Get rid of. What the hell's going on here? No, don't want that. What the hell's going on? Nope, don't want that. Well, I guess we're not going to see that, are we? All right, let's try this. We'll have to do it another day. Sorry. Let's get rid of this. And we're back where we started again. I was just going to introduce the princess and show you the three accounts I do. How do I know a company pays dividends? Oh my goodness! I can't believe. All right. So you're new here, so I understand that. Rule number one: never buy anything you don't understand. Unless you want to long term, you should know everything about the company. Okay? Is it consistently profitable? Does it have weekly options? Does it pay dividends? If so, how many dividends has it paid? And are those dividends consistently increasing? Or have they been decreasing? You should know all this information before you do anything. So let's try it this way. New window. Well, let's see if the new window opens up. We'll find out. All right, so Bowser, you got that? Wonder Bread. I bought 113. No idea what that means. Sweet Dan. Hello, James. Have a prosperous week. You've earned it. Thank you. Microsoft isn't responding. Bummer. Now I need to trade smart and build forever wealth. That makes sense. It kind of does. Think about it. Okay. So here is the 10-minute trader. I told you my website. The 10-minute trader. 10-minute trader. We're going to go here. We're going to go here. That's going to take us to my social media. Right there. And we want to look at YouTube, because that's where the princess is. You need my glasses for this. All right. Now remember I told you. Two live streams. Okay. This one here, and this one. They're both live. YouTube. And pull it up on your big screen. That way you can see the numbers easier. All right. What I want to look at videos. Okay, now I want to find the oldest video. And there she is, right there. All right, there's me. All right, there's me. 15 years ago. Look at all the hair I have. 15 years of hair I have. Holy cow. Here's my favorite part. Here's my favorite part. Ready? It's coming out of the way. Ready? Here it comes. How are you going to keep a 9-year-old entertained? Fun, exciting. We made a game up. It was fun. It was wonderful. It was like 5 years. From she was 9, 10, 11, 12. All right, it was 4 years. When she turned 13, get it. She wanted nothing to do with me whatsoever. Dad, you just don't understand. Right. I don't. See, a man cannot raise a woman. Can't do it. You need a woman to raise a woman. It's like you need a man to raise a man. Women can't raise a man. You just doesn't work that way. All right. Anyway, besides the point. We don't need that anymore. All right. We don't need this anymore. We don't need that. Oh, could we look at Pinterest? Oh, I can't believe you want to look at that. Uh-oh. This one's dying over here. Got to change cords. I guess that brand of cord don't work. And he's got some brand new cables today. All right. I don't know why I'm bothering. How do everybody shows up to that channel? Pins. She wants to look at. Why do you want to look at pins? That company hasn't been around for 20 years. All right. Well, you want to take a look? Let's take a look. P-I-N-S. Pinterest. Interesting. Okay. You guys asked me to take a look. I'll take a look. Here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Down, up. Nice. I like this area right here. Okay. Now I don't know if they have dividends or not, but that's not part of the deal. I'm taking a look. The current price, 33.12. The 33 is going to be the closest. Now it's 68, which is more than 2%, but not really. Because if I buy it at 33.12 and I sell it at 33, I'm losing 12 cents right at the top. I'm sure some of you caught that. If I buy it at 33.12 and I sell it at 33, you're right. I'm losing 12 cents. Take that 12 cents out of this right here. So I'm walking away with 56 cents. Not quite 2%, but still almost 2%. So let's take a gander at the whole thing. A year ago, we're at 34.24. Take a look at this. A year ago, 34.24. Now 33.12. So in a year, the thing went down a buck. All right. Anyway. Top of the year was in the first week of February. The bottom of the year, we had a double bottom in April, twice. Shoots back up. Okay, your high, your low. Where was it? Where is it? Look at this. Your low, down, up, was down. Now she's going up. Here's your bottom. Here. 1, 2 days to the upside. Tomorrow will be a perfect opportunity to jump in if it opens higher. If it opens lower, no, thank you. No, if it opens higher, yeah. Now I like finding a bottom after a 30. Let's go to the 30 days to get a better idea. Here you go. That's 30 days. 30-day high, 30-day bottom. Now she's going back up again. Okay, drops to the bottom. Now she's going up. All right, that's what I'm looking for. Every single week. I'm looking for good companies that I know who they are. I know what they do. I can take a look at all the numbers in order to make it a safe trade, and then I jump in if everything looks good. So far, everything looks good here. So let's go to the next stage. The next stage would be the covered call at 33, right there. One contract. Okay. Here it is. By one contract, PINS. 17 October 25. That means it's expiring this coming Friday. The $33 call option to open, 55 is the profit, 32 is the investment. Let's see what the numbers look like. Why? These freaking things not working. All brand new, and they just don't want to work. There we go. All right. So let's get the calculator out. 55 divided by 32.45 grand total of 1.669. 1.669% for 1 week. But here's the catch. Do I like Pinterest? Am I willing to buy it and hold on to it until it hits my target? Well, here's the funny thing about my target. I'm buying it at 33.12, selling at 33. So it's already in my target. So all it has to do is stay above 33 come Friday. Well, guess what? Check this out right here. Okay. Your 30-day high is right here. Your 30-day bottom's here. She drops. Now she's going back up again. Does it make sense? See, number one question. Does it make sense? Buy a good quality company that you're willing to hold on to for the rest of your life because you like the company. That's the only reason you should buy something. Because you like it, you know what they do, you know if they're profitable, and you know you're okay with holding on to it. Well, that's rule number one. Rule number two is never sell at a loss. So if this thing drops down to 30, drops down to 20, I would have no intention on ever selling it below what I paid for it. The nice thing about it is look at the premiums. Okay? At the money, 68. One strikeout, 46. Two strikes out, 30. Three strikes out, 18. See, I can keep getting money all the way down. How far down does this go? Okay. At the money's 33. Okay, that's 68. One strike, 46, 30, 18, 15, 10, 7, 5, 4, 3. Then we get to zeros at 38. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 strikes out of money, and I'm still bringing in something. Yeah, it's not 1%, but here's the thing. Before you met me, before you came up with it, weekly? Really? Before you learned that, most people bought stocks and were happy getting a dividend. One dividend every 90 days. You buy a stock, you hold on to it 90 days, you'll get a dividend. Another 90 days, you'll get another dividend. Well, here we're buying a good quality company that has dividends and they keep increasing. Why else would you buy it? Not if it's consistently profitable. Which means that dividends will increase every single year. Worst case scenario, if this thing drops, I get a higher dividend next year. And the year after another higher one. But I also get the privilege of bringing in something, whatever it is, every single week until I sell it. And I refuse to ever sell anything at a loss. Okay, I pushed forward target for 6 months because it dropped. Procter, not Procter & Gamble. PPG. Now PPG was one. I just said a little while ago. Kimberly Clark. 9 months. As long as I've held anything until Kohl's. Now Kimberly Clark, PPG, and Target, those three all dropped. Kohl's did it. Kohl's sideways and went up. I made money every single week. Let's do Kohl's right now. Kohl's. Just to let you know, I did buy some Kohl's this morning. Okay, today is Monday. No, wait, today's Tuesday. I bought Kohl's yesterday. All right, so let's take a look. High, low, where was it? Look at down, up. Simple, right? Okay. So it's at last 30 days, right there. Okay, that's the last 30 days. Now the reason I look at the last 30 days was a month ago. Most of us understand a month ago. It's not that far ago. Okay. 15 jumps to 18, drops to 15, jumps to 17, drops to 14, 2 days up. Okay, argue all you want. Higher. All right. So let's see what Kohl's looks like. Let's get out of that. The 1550s, you can't get any closer. Seriously. Don't give me a hard time about this. Okay, someone's going to say, someone always does. You can't get any closer to 1550 than 1549. 1549, 1550. Why not? Let's do the 1550. Look at that. 39 cents. That's more than 2%. Hell yeah. I don't want to do that. I want to see. Hit the wrong button. Even I do hit the wrong button. 1550. There it is right there. Okay, one contract. Right there. Buy one. Covered call. Covered 17 October. That's Friday. 1550. This gives me $45. It's a $1,500 investment. I'm going to show you two of them because I bought a margin. Hold on. And I do not suggest anyone use margin unless you understand the risks involved. So $45 is the profit. The outlay is $15.05. That comes to a grand total of 2.99%. You have any idea what that is at the end of the year? Well, let's find out. 52 weeks, because there's 52 weeks in a year. That's 155%. That's more than doubling. Well, no, it's not doubling your money. Yeah, that is. That's more than doubling your money in a year. Okay. So I got it at a margin. All right. Margin is only $1,000. Not quite 50-50, but still. All right. So $45. Divide by margin requirement, 1,040, 1040. Okay. Divide 10, 40, grand total of 4.3. Think about it. 4.3 for one week. Why the hell not? It's Kohl's. Here's the thing. Do you like Kohl's? Does Kohl's make sense to you? Are you willing to buy it, sell it, blah, 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 blah. Okay. DP402. Do you have any advice on silver? Should people buy it, or is it the high we're seeing temporarily? Thank you. Okay, so DP402. I don't buy precious metals. No, the only reason I don't is they don't offer cash flow. Okay, and you can't take a brick of silver to go get a cup of coffee. Okay, what good is it? It's only good as storage of wealth. That's all it's good for. In my humble opinion. Wonder bread. Now I trade smart. It makes sense. User AJ. Okay. I buy stocks and I sell options against them. That's all I do. Now years ago, I used to do other trading strategies. I used to do what do you call those things? Credit spreads, debit spreads, calendar spreads. I used to short stuff, cash secured puts. They're all more time, more effort. Think of it this way. More risk, more reward. Less risk, less reward. I'm pretty okay with less risk, less reward, less time invested. Okay, 10 minutes a day, 1% a week. That's 50% a year. I'm perfectly okay with that. If you're looking for something more than that, then your best bet is looking elsewhere. Because that's all I do. Well, I do other ones, but I don't share them here. So let's keep going. What does it mean? How would it get exercised? We got a newbie here. That's a newbie question. Don't feel bad. It's a good question. All right. Mike Sweeney. Okay, so Mike, let me see if I can explain this. So we're looking at coal. If I buy coal tomorrow morning at 15.49, I'm going to sell somebody the right to buy it from me at 15.50. Okay, follow me for a second. I'm buying it 15.49. And simultaneously, I'm buying it and selling it at the exact same time. I'm not actually selling it. I'm selling the right, not the obligation. The right. So whoever buys this has the right to buy it from me at 15.50. Okay, I'm buying 15.49. I'm selling it 15.50. I'm collecting this right here per share, which is more than 2%. I'm looking for. Getting exercised means whoever bought this right here. Okay, if the stock shoots up to 18, whoever bought this says, hey, I want to buy those shares at 15.50. So if it jumps up to 18, Thursday or Friday, whoever bought the option from me can now take the stock from me at 15.50. That's the beauty of a covered call. They're trying to buy the stock at a discount if the stock jumps. So here's my entry point. If it jumps up to here, I don't get this. Somebody else does. Well, I don't want it. You turn the fan on. Getting a little warm. Getting a little warm. So getting exercise means whoever is at the end of the equation. The equation is always the same. You buy something, you sell something. Well, if I buy the stock, 15.49. I sell the right to buy it from me at 15.50. Right here. I collect this profit here. If the stock jumps up, that profit belongs to someone else. I only get this, and I am perfectly okay with that. All right, I'm going to get my seat out, answer some questions. We got quite a bit of questions. Now I'm getting closer to the microphone, so I have to keep yelling, save my voice. All right. No fun getting old. Life wonders. Dow. I love Dow. D-O-W. Again. Here's your bottom. 2 days to the upside. 1, 2. She's definitely going up. Here's the bottom. Now she's shooting up. Do you like Dow? Mia, I have no idea who you are, so I'm going to say no. Sorry, Mia. Dow is at 21.92. So more than likely I'd be buying at 21.92. I'd be selling it to someone else at 22. Well, the 22s are going for 37. That's more than 1.5%. So why not? Does it make sense? Do you like Dow? That should be the question. Sea-wide spinner. American Airlines. I actually have some airlines. Ooh, look at that. Look at that. Here's the bottom. 30-day high, way up there. She comes down. Here's your bottom. Now she's going up. Okay. That works. It's at 12.20. So 12.20. I might do the 12.50 or the 12s. No, I'm not going to do the 12s. Because I'm losing 19 off that. And the same, I might as well do the 12.50s. Walk away with 1%. That's if you like American Airlines. Flash. Does it make sense to open with a put rather than a covered call? Okay, Flash, you're talking about the real strategy. And yeah, the real strategy works great. I don't do it because I'm teaching you the same strategy I taught my 9-year-old daughter. So if you go back to YouTube and take a look at the 1,200 videos that I've done. They're all basically the exact same thing. All teaching the exact same strategy for the last 15 years. Because I grew up with if it ain't broke, don't fix it. Okay? Understand that, Flash? If it ain't broke, don't fix it. If it's working fine, leave it alone. You know what I mean? I had a 1928 Franklin. It wasn't a Franklin. Sorry. 1928 Oakland. That's what it was. 1928 Oakland. Had one wire going to the distributor. That's it. One vacuum line. That's it. Okay. Hit the key. Starts right up. If it ain't broke, don't mess with it. GNX. You don't look at day over 52. I'm going to save that comment. Kevin. Oh, K-Van. K-Van wants to take a look at Macy's. Macy's. Now, here's the thing with Macy's. Now, Macy's 2 years ago was my top producer. 402 Bob. You don't understand. Okay, Bob, I'm sure what you mean by that. If you can explain it'd be great. So K-Van, here we go. I usually don't into something that has a big gap like this, because gaps have a tendency to fill, which means this thing should be coming down. But this thing looks like it's coming to a trading range. The trading range was 11 to 13 for 6 months. Now it's just a new trading range for the past 2 months. So let's zoom into that. Right there. Okay. So here's the new trading range. Okay. Between right there. So up, down. Now you get 2 days the upside. Right there. 16.30. Why not? Then you have to ask yourself the question: do I like Macy's? Am I willing to hold on to it? 686-857-59. New to your life. What do you think about gold? Is pretty. Isn't it pretty? Gold is pretty. I don't buy gold. I don't do because the funny thing is, A lot of people do the same thing. Bitcoin and gold. Wonderful, Greg, awesome. Yeah, they weren't where back in the 80s, the early 80s, late 70s, early 80s. Gold was at $250 an ounce. $250 an ounce. Okay. It went on a gold run. It did. They called it the gold rush of the 70s and 80s. It jumped up to I forget what it was. $800 an ounce, something like that. The people who bought gold at a high back in the 80s had to wait. Are you ready for this? Had to wait three decades. Three decades. 30 years just to break even. Okay. So some poor sucker is buying gold now. And if the bottom falls out, last time the bottom fell out, gold had 3 decades to break even. Okay, so no, I don't do gold because it doesn't cash flow. Sorry. All right. Do you have any advice? Where do that question? Bob, do you understand? What is it? I don't understand. What's the website called? The 10-minute trader. The 10-minute trader. Okay, do your research. I've had the 10-minute trader for almost 20 years now. The dots finally connecting. Hey, Shop Pro Tip. I appreciate you. Shop Pro Tip, you've been here for a while. I remember you signing in a couple of months ago. The dots are finally connecting. Okay. Way to go. Vonnie Ford grows on me. It should. It's been around for over 100 years. Uh-oh. I missed that. Okay. Gold did that one. Vonnie, thank you for that. Bonnie, thank you. Mike Micklux. Any thoughts on any yield max stocks such as SMCY? Ryan, I'm going to tell you the same thing I tell everybody else with that SMC crap. Okay? If you like it, you do it. Ryan, I'm pretty rigid in my picks. Meaning I like companies that have been profitable for at least 2 decades. Okay, so SMCY. Let's check it out for a second. No, that's the one that ain't working. Oh, that's not the one I want. I don't want that one. I want this one. Okay, Yahoo Finance. All right, there we go. Okay. I want. What was that? Yield max. SMCY. Give me a second. I'm over Yahoo Finance. SCY. All right. Let me get up for this one. Because Ryan needs to see this. Ryan. Okay, Mr. Ryan, here we go. Title Trust to Yield Max SMCY. Okay. I'm going to look at the historical data. Historical data goes back as far as the stock goes back to find out is this company consistently profitable. Let's find out. Give it a minute while it loads. And then we're going to see just how profitable has SMCI been, and does it make sense to jump into it. Come on. So we're a little slow tonight. All right, here we go. Okay, so Ryan, this is what we're looking at. Ryan, what we're looking at. The date. Okay, these are all the dates. 14, 13, 9, 8, 9, 7, 6, blah, blah, blah. The opening price, the high of the day, the low of the day, the adjusted, and the volume. I don't want to see any of that. I want to see this right here. this right here. Pay attention to that. All right, we're going to go this. And I want to look at dividends. Only. Now, the reason why I want to look at dividends only is because if the company's consistently profitable, the dividends will consistently increase year over year over